Morning Squawk newsmaker Leon Cooperman of Omega Advisors. We have a market rally this morning. U.S. equity futures at this hour are up over 200 points after a series of pretty good sessions in June, you would have to say, as May has become sort of a distant memory. We must be back to almost even after what was a pretty crappy month. They're down almost 10%, I think. We're close to new highs across the board, not quite there yet, but
this extra 200 points, you're probably within spitting distance.
Probably are.
We were only off by about 1% yesterday.
It's pretty funny. I think the stock market and traders are just playing a big joke on the Fed. It's like I was saying earlier. They can't believe they've talked the Fed into easing. It's like we never thought you could. We thought someone came up with, hey, let's try and get the Fed to ease when it's ridiculous to think they should ease. Let's sell off. Let's throw a tantrum. And suddenly they came around, they're actually going to do it. I don't think the stock market can believe these guys are actually going to do it.
They're going to do it, actually.
Maybe it's 100%, though.
You have, stimulative fiscal policy. Recent retail sales are very strong. Interest rates are already very low. Unemployment is a 50-year high.
It's only inflation, Lee. That's the only thing that they can hide, that they could. And maybe it is. Maybe that is.
I think these interest rates already incorporate low inflation. They know something I don't know.
But if I wanted to take the other side, I'd say, look. We want to do 3 to 4% if we could. It would be so great if we could get back to that. Maybe we can't, but why not keep the pedal to the metal if there's no inflation? Why not do a new economic plan? Get on board with what, all the deregulation, the tax reform, get on board with that and keep interest rates low.
Maybe that's the approach they're taking, but, the trend growth in the economy is only about 2%.
That's what we hear, but is that if productivity increases because of innovation and inflation stays low because of innovation?
2 years ago when I said I was assuming trend productivity of 1.5%, I was told by an economist that was way too high. Now with the economy doing a little bit better, they're saying productivity is going to be higher than 1.5%.
Right. GDP has fooled people. It's been about 30-40% higher than people thought it could be. Maybe it's a sugar high. That's what people say.
I would say that we all have to understand we're in abnormal times today. And if you don't understand that, you don't understand what's going on in the world. There's $12 trillion plus of sovereign debt that carries a negative interest rate. Just think about it. Ask yourself the question. If you lend money to Germany, Switzerland, Japan for 10 years, they give you back less than you lent them 10 years later.
You're paying them. Switzerland
raised money a couple of days ago, 70 basis point negative return for 91-day Treasury bills.
A lot of old people that can't retire. They don't have enough money. They have $1 million. Now they're getting 20 grand a year. They used to get 80 grand. So, it's not all positive, and maybe it's a savings glut. Maybe it's a savings glut or something.
I think it's incumbent upon guys like me that run money. Thank God I don't run anybody else's money now. I just run my own. Basically, is to try to figure out.
Why, thank God?
Because
you suck.
No, I know.
I swapped income for lifestyle.
Right.
Basically, I have no revenue. I'm like the guy in The Godfather, Meyer Lansky at the airport.
Yeah.
Godfather 1. Yeah. Right before he was shot. I'm a retired executive living on a pension.
Living on a pension.
Yeah. That's me.
Yeah. Very similar. Because you both had about the same amount, I would say. Because they thought he had billions.
I made mine the old-fashioned way.
Well, it's a matter of opinion, I guess. Well, the stock market in Meyer Lansky.
Got up at 5:10 every morning for 45 years and whatever. But, I'm saying my theme for 2 years has been the following. We live in abnormal times, okay? The notion, 2 years ago, somebody moved into a home in Denmark. They got a check every month for living in the home because there was a negative interest rate in the home mortgage. It's not realistic. So I'm trying to figure out what normal is. And this is my take, and it leads into the market. What's normal? I think the productivity growth, about 1.5% trend, labor force growth, about 0.5%. That determines real growth, about 2% real. Add another 2% for inflation, that's 4% nominal. In a 4% nominal world, I think the Fed funds rate ought to be 3%, not 2%. And the 10-year government will ultimately get to 4, currently around 2. It may take 2 or 3 years because of global interest rates to get there. In that world, I think the market supports a multiple about 17 times. If you're a bull, okay, you say 17 times is low relative to interest rates, which it is. Okay, and if you're a bear, you talk about all the artificiality in the system. But 17 times my estimate on the earnings of the S&P 500, which is about 170, is 28.90.
Right.
The market's 29.50, so we're in a zone of fair valuation. We're not overvalued, but I think The comment I love, and I wish I coined it, I didn't, but Sir John Templeton developed the phrase, bull markets are born in pessimism, they grow in skepticism, they mature in optimism, and they die in euphoria. I think a significant rise from here in the near term would mean we're into euphoria, but we're not into euphoria now.
What's significant? Is that 10%
I would say
from here?
If the market is fairly valued at, say, call it 2,900, typical tops, you could be 10, maybe even 15% overvalued. So I'd say, 3,100 in the near term would be knocking the door of euphoria.
And then what would you need to correct that and then move higher again?
Time.
I mean, do you need a bear market or a correction?
No, a bear market does not materialize to have immaculate conception. A bear market comes about for certain fundamental reasons.
Yeah.
You have a bear market because the market smells an oncoming recession. Doesn't look like that now. A bear market comes because the Fed becomes hostile, chokes off the market. If anything, the Fed has been too easy.
But you're talking about the last stages. That's what I'm just, when you talk about that part. So I'm wondering, would it just be a pause that refreshes? We go to higher highs after that?
Or it's a part of the economic fundamentals.
Yeah.
I mean, right
so you're
now,
not saying it's over.
Now, I use the word shih tzu, right?
Yeah.
We have free money.
Free shih tzu.
We have free money.
Yeah.
Basically, in the last 50-odd years, the multiple in the market was 15 times, basically, but the 10-year government was 620. The 10-year government now is slightly under 2%, or call it 2%, and the multiple in the market 17. So the market's not expensive. If there's a bubble out there, the bubble is fixed income. Like I say, I don't understand the focus on easing, and gold is starting to tell you. Gold's up 3% this morning. I think that I question the appropriateness of easing given the strength of the underlying economy. And I think what we're doing, we're pulling forward demand. The president is very intent on having everything good now, and we're pulling forward demand. So you have stimulative fiscal policy, you have stimulative monetary policy, and my guess is, there's free money. And if there's free money, the market's going to do just
free
fine.
money for a long
But
time.
you can understand you're pulling demand forward. Okay, and the deficit is going up now in the face of a decent economy. The deficit should be going down with full employment. Okay, and so it's unusual circumstances. And if there's a big move from here, I would say it's a closeout move. It's knocking on the door of euphoria, and you'll have to conduct your affairs accordingly.
Lee, the only argument I'd make with any of that is that people have been saying this for a long time, that this can't continue for forever. What is the thing that actually says, okay, we're going to have to come back to some form of normal, or do we ever get back to it?
Yeah, you'll get there. Maybe we'll get there when people least expect it. No, don't forget the market was 29.50, I believe, in January of 2018, so it's not like done a hell of a lot.
No.
Earnings have gone up in the period, and the market's done nothing. Multiples have
and there's
down.
still a lot of haters of this market too. Even though you're saying we could get to euphoria, it's a lot of it is still met with skepticism. Some of the indicators people use, sentiment indicators, are still not that bullish, right?
Part of, I think, the sentiment, the negative sentiment, is a theory on my part, is that the money managers see their business threatened by the tremendous growth of passive management, which is putting huge downward pressure on fees. So their basic business, their livelihood, is being threatened. I went to a seminar a couple of years ago that focused on closing the gap. It had all to do with income disparity, which interests me. And there was a futurist from McKinsey who spoke, and he said his thought was the biggest problem the economy was facing in the next decade was 45% of all jobs being performed would be replaced by automation, and there was no alternative work for these displaced workers. Okay, and I said, when I went home that night, I thought about it. I said, that's passive management for my industry.
Right.
Because passive turnover is maybe 5% a year, active turnover 25% a year, big reduction in liquidity, big reduction in the pool of commissions available for the brokerage industry, so they have to resize their effort to that reduced revenue.
You can measure general public sentiment, too. I mean, that would be investment services bearish. I mean, if you just talk to the average person, they don't seem to think that.
Well, they still were wearing the scars of 2008.
Yeah. Right, maybe that's good.
Which is good.
Yeah.
But at the end of the day, I'm a numbers person, and I think that the market is in a zone of fair valuation. And like I said, go back to Templeton. Maybe if we have a big move from here, okay, I think it's the closeout move, in my opinion.